Australia's economy slowed to 0.5% growth in the December quarter, well under forecast expectations of 0.8% growth. The slower pace of growth is a sign that inflation and higher interest rates is cooling demand and that pressure is expected to increase when more than 800,000 Australians come off fixed-rate mortgages this year. Let's bring in the Chief Market Strategist at Investsmart, Evan Lucas. Evan, good morning to you. So, consumer spending finally, it would seem under control. It's on the way down anyway. So, in your view, is the inflation peak past?
So, there was lots of data out yesterday, Pete. So the second part of your question there around the inflation numbers was actually a surprise. It's still way too high. It needs to be pointed out there. Inflation is still month on month moving over about 7.4%, but expectations were that it was going to still remain in the 8 level. So it is quite a decline. You're right to point that out. It is, again, because we're seeing things like particularly food prices coming down significantly. Getting back to the GDP figure that you alluded to there before, what was so telling about it is the pressure in the household sector is absolutely there to see in all shapes and forms. So if you look, don't forget your year 10 economics, GDP is consumption plus private expenditure plus government expenditure plus net exports. So exports minus imports.
The whole lot.
The whole bit. So what supported it yesterday? So year on year, it grew at 2.7%, down from 5.4% in the September quarter. So we are slowing. Was net exports did incredibly well. Tourism was the big standout to really look at that. That was what really drove net exports along with our commodities, and then government spending. Consumption was actually negative, and that's, again, getting back to your question around the consumption part. What was also really interesting about the data yesterday is the savings rates in the household is now below COVID levels. So we've now actually seen the savings rate contract, and it is under pressure. One of the biggest parts of it is the taxation of the household was also now at a level we haven't seen for about 6 years. And that is another part of that cost of living that we're having a debate about at the moment is tax and taxation on the personal consumption. So that was what was really interesting about the numbers yesterday. What they're also showing you is that COVID was supposed to be the great reset. COVID was supposed to be an ability to reset and get productivity back in line. If you look at the per capita basis, so that strips out things like migration, we're actually at zero growth for the quarter, and year on year, it's just over 1%. And that's what we were averaging basically from around about 2009 to 2019. From where before that, it was about 2% growth. So we're now at 1% rather than 2%. We are going back to a fairly low productivity nation that is basically backed up by migration rather than any form of productivity.
So I wonder what Philip Lowe does next then. I mean, now that the rate rises are starting to bite, with all of those numbers that you just talked about, I wonder if this will lead him to press pause and see how the lag goes, or will he keep going?
Now, he will go next week, but you're right. I think this also needs to be pointed out. The RBA probably isn't thinking more than 2 months ahead. And why I say that, again, they still leave in there very, very subtly that they're data dependent. So by the end of April, we will have got all of the quarter for CPI, all of the data around wages and all of the data around what's going on in the household space. And they're all contracting. You're right to point that out, which means that if they have the ability to pause, they will do that. He's almost telling you that he wants to. I mean, but he can't at the moment. As I said, inflation at 7.4%, that's too high. That will be his justification, unfortunately, for next week. But that's why the suggestion from the RBA is that maybe April is done, whereas the market and some economists are still saying there's more than that. The pressure is there. The pressure has been seen. You're already looking at it from the housing price fall. You've seen that, as you said, from consumption. You're seeing that from the household sector. All of the data is pointing to that it's taking effect. So you're right. Does he go too far? Does he therefore lead to a hard landing rather than a soft landing, which is going too hard and creating a recession and creating high unemployment? That's his tightrope. That's his narrow path he's referred to. So next week, yes, he will go again. But the April one is the question for you, Pete, on that one. April is now becoming a little bit more difficult with the data telling us what it's telling us.
We shall see.